Hello, I'm Bruce Six, Chief Investment Officer for Mid-Atlantic Corporate, and this is the economic update for January of 2014. Today we're going to look at what's expected for the economy this year, Janet Yellen's confirmation hearings, rate expectations for the year, January's data releases, and then we have our member question. Key things to expect or look for in 2014, jobs growth should average somewhere around 200,000 jobs per month. That's a good number and should get us to an unemployment rate of 6.5% by December of 2014. Inflation should remain below target. That's the expectation by economists. PCE has been running around 1.5%. The Fed would really like to see it more like a 2.25%. Of course, they've set that upper limit of 2.5%, but we're going to probably underperform that as we go through 2014, similar to 2013. Gross domestic product coming in at a decent number, at least forecasted to, at 2%. We'd like to see GDP move a little bit faster, maybe 2.2%. But 2% is a good number for an economy the size of the United States. Fiscal policy is one of the wild cards as we go into 2014. We've seen a little bit of a thaw going on between the Democrats and the Republicans. Still to be seen whether that continues or whether we're still kind of locked into that gridlock that has really constrained government spending. That's forced the Fed to kind of counterbalance that by continuing stimulus a little bit later or longer. Fed stimulus, we're expecting the tapering, which began in December of 13, to conclude at the end of 14, probably be about $10 billion per. The Fed continues to say they are very, quote, data dependent. We will see how that works out, but expect stimulus in the form of QE3 to be done by the end of 2014. Janet Yellen's confirmation hearing has been set for January 6th. There's kind of a pre-vote that's been done by the Republicans and the Democrats. Does not look like she's going to have any problem with the confirmation. Just as a side note, she will be the first woman to head the Federal Reserve and also the first Democrat since Paul Volcker back in 1987. Rate expectations for 2014, we're really expecting that tapering again to continue throughout the year. That's going to allow the long end of the curve to move higher. The 10-year currently about 3%. Expected to end the year probably more in the 3.5% range, 3.4, 3.5%. But with Fed funds not moving, 2 years in on the yield curve is going to remain fairly well anchored at this lower level. So the 2-year is currently at about 38 basis points. And if you look at what the markets are expecting, probably end the year somewhere around 50 to 60 basis points, 50 or 55 basis points, really held in by the Fed funds not moving. Again, Fed funds currently projected to start moving about the middle of 2015. When we look at January's top tier economic data, we have the unemployment numbers coming out on January 10th. That's always going to be one of the biggest numbers. And also the personal consumption expenditures, or PCE number, the core inflation number, coming out on January 31st. So the member question for January is, what should I expect or what should concern me in 2014? Well, there's a lot of things that should concern you, but if we were to distill it down to two of the key factors, I would say watch for any kind of potential change in fiscal policy. If politically the government gets to spend more money, that'll take a lot more pressure off the Fed to kind of counterbalance that with monetary policy, and that'll have a significant impact. The other concern I would have is an unexpected acceleration of inflation. We said earlier, inflation expected to stay around 1.25%. Not too bad there. That's actually below where the Fed would like to see it. But if it does trend higher, that could put the Fed in a very uncomfortable position. So that's the economic update for January 2014. I'm Bruce Six. Make it a good month.